Hi guys, welcome back. In today's video, we're going to be looking at AUDUSD. I took a trade today on AUDUSD. This was actually an add-on trade as I've been looking at this pair from last week. Right, so this was the analysis that I had, or rather the projection that I had on AUDUSD. As you can see, I took a trade. This was last week on Friday. Not really the best of my entries, but I took the trade based on this peak formation just below this 800 EMA, which is the 200 EMA in our H1 time frame. Right, so as you can see from this area, we're at this peak formation, right? We're at the peak, and we identified a push, right, giving us level 1, another push, giving us level 2, and the last push, giving us level 3. And as you can see, this is where the dealer ended the day in consolidation, right, as this was on a Friday, right? So when the dealer opened on Monday, as you can see, we had another push during Asian session, giving us this high of the day. And from this area, what we can identify is a push down, level 1, level 2, giving us, a reset. As you can see, we had W formation below the 200 EMA. So I wanted to see a push to the upside. I wanted to see the market get up to these highs right here, as this was an add-on trade. All right, so this is what we have currently on AUDUSD. So what I'm going to do is I am going to mark this up from the higher time frame so you guys can understand the reason why I had this bias on AUDUSD. So I always like starting from the higher time frame. If we start from the daily, this is what we had, right? As you can see, if you look at the previous market structure, we had this crazy move to the upside, giving us that low, as you can see, and we had a move to the upside. So currently, market has created new highs. So I was trading based on this market structure that we have here. So if we go to the H4, so we can get a more clear picture of what's happening here. The recent price action we can identify is this demand area right here. This is basically what's in charge of pushing price right now. So one thing that we can see here is we had the break of this structure, right? This is what we can see in the H4 time frame. We had the break of the structure, and let's go down to the shorter time frame so it's more clear. I think the H1 will be good on this one. Right, so this is what we had. Right, from the peak formation, I did explain the level counts to the upside, and we were expecting a peak reset at this level. All right, so what did we have right here? Very simple. We had an order block. Right, as you can see, very nice order block. We also had price push up, giving us imbalance on this candle. As you can see from this area to this, some people might call this a fair value gap. Right, so very simple. We broke structure. So this low that we were more interested in, rather, to look for trades here was this low, right? This low right here. And as you can see, we had a move to the upside, giving us a higher high, and we started pushing to the downside. So I had my eyes on this order block right here. This is where I wanted to see a trade. So if we go to the M15, this is what we had. Right, as you can see, very clean order block that we had. For those who would like to refine this, even we can refine it and look to take trades from this zone instead. So let me just remove this so you can have a better understanding on what was happening here. So as the market was pushing down, remember, we had our points of interest already. As price was pushing down, remember, price will always play around the areas of liquidity, right? As this is the fuel for the market, right? It's more like petrol for the market, right? We need this to get this vehicle running, right? So from this supply area right here, we pushed. One thing I identified is, before I enter a trade, I always like seeing areas of liquidity. So one thing that we had right here was relatively equal lows, which was just above this order block that we're interested in, taking a trade from. So as you can see, price then pushed down. Price pushed down, hitting the stops, tapping into our order block, and as you can see, price is on its way to the upside. Right, so remember, I was targeting these highs. Right, I was targeting these highs because obviously, if price moves from the order block, this is where price would want to get to. All right, as an area of liquidity, of course. Right, so as you can see from that zone, if I was actually watching this from this order block, right now we'd be looking at 48 pips, and our target we're looking at 55 pips right there. But I didn't take the trade right there. If I take you to my MT5, this is what we had, right? I kind of took the trade a bit late. As you can see, here was my entry. My stop loss was just below, so I was looking at a risk of plus minus 15 pips from this area. My stop was just below the area, so yeah, 15 pips. And as you can see, as price pushed, I then moved my stop loss, just above my entry. And as you can see, we are about to actually reach those highs right there. If you look at it from the H1, this is what we have, right? A very nice trade. From the H1, this was just a trap below the 50 EMA, right? 50 EMA, which is this light blue EMA right here. And in our M15, this was a trap below the 200 EMA, right? Which is a peak reset. Right, so as you can see, very nice. And the type of W formation we had here was, the second leg was lower than the first, which shows a clear hit of the stops. Right, so that's what we had, right? So this is in the M15 time frame. If we move to the M5 time frame, for those who want to minimize the risk and get a better entry, this is what we had. We had priced, pushed down, went back to this order block right here and gave us the last push, tapping into our order block and gave us a push away. So for those people, who like trading from the M1, you can also, get down to that time frame and find an area where you can, get involved into the market with less risk. So the type of peak formation we had here was the first leg, second leg was lower, giving us a clear hit of the stop loss. And as you can see, price has been moving to the upside, ever since we tapped into that order block, right? As you can see right there. So I'm about to close this trade. My main target, rather, when I looked at this, from the BTMM view, in the daily, is I wanted to see this push all the way up here to the 800 EMA, which must still happen. But currently, just based on this trade that I took today, right, as it qualifies as an intraday trade, I might just take some profits here, or take some partials and leave a runner and see if we will make our way to the upside. So currently, this is what we have from the peak reset right here. As I said, we had basically a full day of rise, right, giving us 1, 2, 3 levels of rise, right? So as you can see, price has now given us the peak reset here, so we might see another flow of price to the upside, another flow of price to the upside on this one. So yes, guys, that is the reason why I took that trade. And I hope you guys learned something from this video. A very simple trade, not really a complicated trade, but I mean, that's the whole point. The whole point is to keep your trading very simple. No need to complicate it. And I also shared this in our Telegram channel. If you're not part of that, do find the link in the description below and become part of the community. This is where we have live trading sessions, free signals and free setups, and more educational content. Right, so this is basically the entry screenshot that I sent over, and this was the H1 view at that time. All right, guys, so hope you guys learned something from this. Don't forget to leave a like, leave a comment, and also subscribe and share with your friends. And also, we are currently on our third day of our boot camp, which is basically the 1% Trader boot camp. And this boot camp basically It's based around basically showing you guys how you can use BTMM or other SMC smart money concepts, you know, to trade prop firms or even your personal accounts, you know, focusing more on percentage rather. You know, for these prop firms, most of them, they, you know, demand rather that you don't risk anything more than 1%. Some prop firms can go for 3%. So it differs. So basically, we look at how you can juggle your way around the markets while focusing on risk, because most people, you know, are quick to look at the profits, but they disregard the risk, right? And that's very important, because if you do not, you know, keep an eye or manage your risk very well, you risk losing your account, and you do not want to do that, especially if you're going to, you know, purchase a funded account. Right? You need to be very strict when it comes to your risk management. So yeah, that's on the third day. You can actually still be part of this. You can actually still be part of this. If you want more information on that, you can contact me through, you know, the links in the description below, through WhatsApp or Telegram, and you will get more information, as you can still be part of this, and you can be able to watch the recordings that have been recorded so far and catch up, as this will end on the 24th. All right, guys, hope you guys learned something from this video. Don't forget to leave a like, leave a comment, and share with your friends. Cheers.